the Zoom recording. Hello, hello. Welcome, guys, to another webinar with the Everyday Growth Advisors. This is going to be your Monday webinar, preparing you for the week ahead. If you have been following along on this webinar, if you've been following everything that we've been kind of going through week after week, I think you would be in a really, really nice spot right now. We have been following market movements for, and calling it to the T from January. And if you've been a part of this Discord community, you would have realized that it's been really, really great, just kind of following along and trying to navigate these markets together, which is a fun process of having a group experience. So what are we looking at this week? What are we looking as key, overarching trends? But more importantly, what happened last week or what happened the week before and what has been happening? You need to kind of understand what's been going on to understand what's about to happen. So first things first, as we've been covering, just to give you a brief summary for those people who've just joined the Discord community or just tuning into this webinar or, just tuning into Everyday Growth Advisors. First of all, welcome. Thank you for, choosing us as your education destination. We concentrate on delivering really good, clean content that will help you navigate financial markets. And I hope that you enjoy your stay, wherever it is, on our Instagram page, on our YouTube channel, or even in our Discord. So welcome in. So the story has been pretty straightforward, right? We've been seeing the entire market ever since January came along, rally into a really nice over exuberant phase, right? If you look on the 4-hour chart here on SPX, right? We had a very big over rally. We had a brief moment where we went into kind of a parabolic movement. Not fully parabolic, but you get what I mean. Very quick buy up. All right. And then after that, we had a slide down, which was a nominal correction. And this correction was to the tune of about 6%. Okay, 6%. So you can see the correction tool right there. So this right here. 6% was what we came down from the highs to where we reversed on Friday. A 6% correction is very nominal, very, very normal for a move on the uptrend. Okay. And of course, there are going to be individuals who are going to say, oh, this is just the start. This is going to be a bear market for a while. Okay. And they may be right. They may be wrong. There is no point trying to predict. Okay. There is absolutely no point. People who try to predict the market lose more money on predicting the market than actually trading and making profits. Okay. And so therefore, there is no point to predict. Our stance on dealing with market conditions is very simple. We average into our cost basis. We get prices at which when they're overextended, right? And when you imagine like there is a rubber band that you're stretching and stretching and stretching, at some point it has to snap. It has to go back to the normal mean conditions. And so that's what our style is. And that's the style that has got me far in the past 5 years, right? After 9 years of being a trader. So right around here, right, we had very, very tight market conditions. I view it as, imagine you were on a truck, right? You're on a truck and you're going up a hill, right? This is your hill. And, on this truck, which is my cyber truck, right? A very cool truck here. You have your wheels or whatever. And, there are people sitting on this truck. And there are so many people that the truck has such a tough time moving up this hill, right? It has such a tough time moving up this hill. Because the truck is overloaded, right? The truck is overloaded. It's a heavy truck because there are so many people on it. So what does the market do? The market is a natural, allocation of capital that will naturally want to shake people off before continuing higher, right? We always see peaks and then we see troughs and then we see peaks again, right? So how can market participants ensure that the rally continues? Well, we need a pullback for that to happen. Now, how do pullbacks happen? It only happens if people get fearful, right? And so you have to understand something. There's always a narrative that drives the market. Always. There is always something or another. It will always be, oh, bond yields are going higher. Oh, this is happening. This is happening. This is happening. There's always some reason why the market will sell off. Okay. And there is always a buyback after that. Okay. So to have a look at where we are now versus where we have been, the U.S. 10-year, by the way, the bond market. Um, oh, U.S. 10-year, just the one. I want the yield. Oh, okay. The US 10-year is at 1.577. So far, this is actually okay of a level as long as this doesn't go shoot up parabolic to like something like 2 or something like 1.9. A 50% increase in the bond market from where we were at 1.0 is a lot. Okay, it's a lot. But we also have to look at where this level was during the during other crises, right? Other crises. Okay. So in 2020, the bond yield were down at 0.3. At this point, everybody wanted bonds, and now we're stretching back to the normal bond yield. Okay, in fact, the nominal bond yield, okay, is actually around where we are right now. Okay, this is actually the nominal bond yield for many years. Before the U.S. bond yields were super high. Remember in 1990s, through the crisis. Remember that bond yields were once at even 15, 16%. Okay, and the fact that now we're kind of going back to the nominal bond yield, I think it's very a good correction to have for bond yields to kind of stabilize at where we are. Okay, of course, I'm not saying that people should go and sell bonds. What I'm saying is, I think that this is a normal reallocation of the inflated balance sheet that the Fed brought on when they had the COVID crisis happen, right? In March of last year, remember what happened, right? Everybody wanted to buy bonds, right? Everybody wanted to buy bonds, and the rate of bonds fell to 0.4%, right? 0.4. Okay, the coupon payment was 0.4, and now we're seeing the reverse, right? And you're seeing the reverse situation of everything that happened in the coronavirus crisis. What was dying during the crisis? It was energy and financials. And what is happening with energy and financials now? Strong rallies, right? XLE, XLF, right? Huge rallies, right? So we're actually seeing a reversal of what has been happening during the coronavirus crisis. This is the market adjusting to a new nominal situation. Okay. So when people are over sensationalizing the news headlines and talking about how bond yields are the topic of discussion, yes, it could be the topic of discussion, but it doesn't warrant a market crash that how people would tout it to be. Okay. A nominal correction happens on a uptrend, and this is a nominal correction. Okay. So this correction, in my opinion and in my view, has now already reached a point where it may be approaching a bottom or may have bottomed out already. We can't say for sure. We don't know, right? But what are a couple of things that would possibly show me, a possibility that this is happening, right? Well, the first thing to look at is on the daily chart here on S&P 500. You can see that we had a red candle on the 4th of March, and the 5th of March on Friday. It was a very bullish close, very bullish. We actually came down further. We came down to here. Bears pushed the price down, came down right to my last line of defense here on S&P 500, and then I was actually targeting the 3680 as the final last line of defense, but we never got there. Okay, we never got there. Instead, we actually bought up, and this is a very bullish engulfing candle. It's kind of weird. I sometimes cannot understand something. How technical traders are so technical, but they don't understand reversal patterns. This is something that boggles my mind. Like, I mean, if you're a technical trader, if you're somebody who uses TA a lot, how can you not understand price action? And how can you not understand candlestick reversal patterns? It baffles my mind. So anyway, I think there are still some people who remain bearish because they don't trust what is happening, which is kind of dumb because, in my opinion, if you are great at TA, you know this is a reversal pattern, okay? And yeah, we did break over a key level here, okay? And we opened above the key level, which is the resistance right here, okay? And we may come down to test the resistance a little bit. but that is going to be your confirmation. So you already lost out on the most important rally, which was the reversal right here, versus the rest of us who have been averaging in, and we bought the final last hugest part of our position down here on the bottom. Okay. Instead of us trying to predict, oh, this is the bottom, this is the bottom, this is the bottom. We don't do that. All we do is when the market hits lower, we add our positions in tranches on the most key levels of support. Okay. And that's how you tackle these kinds of market meltdowns. But remember that this is not a meltdown. This was more of the shaking of weak hands. Because market makers, if they want to have cheaper prices, they have to instill fear, they have to instill a downtrend in order for retail traders to get squeezed out. Remember that majority of retail traders would have set stop losses somewhere in this region, okay? And so market makers would have come down to close those stops out, and then we can rally to the upside again, okay? Now, I'm not saying specifically for SPY, but I'm talking about specifically for many other stocks, okay? For example, let's look at a couple of random ones, right? Let's look at, let's say, Square, right? Okay, so let's look at Square here. So remember Square, this was when majority of other retail traders would have entered the last time, right? There was a bullish pin bar, a reversal pattern here on the daily chart, right? And then look at what happened this time around, okay? We came down, and remember, if this is where most entered, their stop losses will be somewhere here, right? So market makers have to push the price down further than where it went, stop them out, and now we can reverse, right? So this is how the standard case of the market goes. Okay, we have to have this happen, right? Oh man. Okay, great. So when all of these kinds of reversal patterns happen, and you can see, I'm not just pulling out one example, like Square is just one example. You also have, EV sector names. You have, look at Palantir, for example, right? Palantir has a big support here, right? But where did we come to? We came down way below that, right? We came down way below that to stop out any people who were here irrationally, stop them out so that we can consider to the upside, okay? Okay, great. So now, where do we go from here? First of all, from my perspective, if the market falls further, then great. I have another opportunity to buy at cheaper prices. I can pick up, stocks that are undervalued at a very cheap price. Remember that I have already allocated a $40,000 portfolio, which consists of a lot of different stocks. Everybody in the Discord has access to this. The primary sectors that this is under are going to be industrial, Chinese tech, US tech, consumer cyclicals, ETFs, consumer services, healthcare, and automotive specs, which I may choose to hold longer, or I may choose to exit a bit of my position with. Okay. Now, this portfolio, it has been averaged in only twice, and I caught these prices at really, really excellent prices. I got very good fills on these, and I'm very, very happy with the fills that I got. So there's really no complaining. My first fill price was here, and my second fill price was here. So somewhere around these 2 points is where I added positions to all of the stocks that I own on that portfolio. Okay. Now, what is the theme for this week? The theme for this week is that the stimulus has been passed, and so this is more than likely the rebirth of the bulls, or it also can be the death of the bears, whichever way you want to view it, right? Either going to be bears looking to claw back, trying the hardest to control the market, but I don't see that. Now, why do I not see that? It's pretty simple. Let's have a look at the NASDAQ, right? Okay. Now, if you look at the NASDAQ on the daily, look at this close on Friday. All right, this is a very bullish pin bar. This shows you that the NASDAQ came down to the 150 moving average, and bears pushed the price all the way down before bulls pushed the price all the way back up here. And we are actually going to have, right, this was the close on Friday, and I think today we're going to possibly open up higher than this. We obviously don't know for sure if we will open up higher than this, but it's yet to be seen, right? And if we get a further drop here, the drop is going to be temporary, right? Where can we drop to? We can drop to here. Okay, we can drop to the 200 EMA, and that will be another maybe, I want to say 7% drop. Okay, but a 10% drop in this environment, in my opinion, doesn't make sense. We typically will have a 10% correction once a year, and we've already had one of those. We might have another one. Who knows? We can't predict these things, right? But if it drops further, then I'll be loading up my portfolio even more. I'll be taking even longer, even bigger positions that I can for all of my portfolio, long-term portfolio. Okay, and that's how you're gonna take the strategy going forward. Okay, you don't try to guess, you just add as you go along. You don't expend all your capital at the same time. You never do that. Okay, great. Now, what are some other things that we have to keep track of? So primarily, um, many of the FANG stocks are sitting on very key levels of support, which I like. Okay, I like. And also, we see the rotation within energy and financials continuing. But however, I think that this past Friday was a great time to start to rotate into tech, which is what we saw. Okay, so if you look at the 1 week performance here, 1 week performance of the entire market. So, these numbers were much worse than this when we were midway through the week. But as of Friday, you can see that actually quite a bit of money went back into Microsoft, Apple, and Amazon, your key tech stocks. Okay, stocks like Tesla continue to get hit because they're high beta and super risky. Hence, in the tech sell-off, these are the ones that first get sold off, right? And so you have to be worrisome about that. But for this week, in my opinion, in my view, I think it is a good time to start to look at rotational positions into technology, namely the undervalued technology, Microsoft, Apple not so much, but you can take starting positions in Apple. I took a starting position in Apple. I intend to add more to Apple because I think that Apple can come down a bit more further before going back up. Okay, so I intend to take a little bit of a drawdown on Apple in the short run because I can't time it. I do not know when it's going to go down or when it's going to go up or what or I can't just draw a few lines on the chart and figure that out. Can I? I'm not a prophet. Nobody is. But what we do is we take a strategy where you take a little bit first and then you add more later, right? And other big movers with Google and Facebook. Amazon is a great undervalued stock. So is Microsoft. Yeah, these are the primary key tech that I like right now. And then also looking at consumer defensive, we'll see how energy performs this week, but I have a feeling that we may continue to rip. Industrials is also something that I want to look at this week. So these are the key sector rotations for this week, okay? And I'll try to shortlist a couple of things that we can look at for our snipe list so that we can actually be a bit more zero focused on these names. So we'll put that in the Discord community. You guys get access to that every morning. Okay, great. Apart from that, I think pretty straightforward to address everything else. We have a $1.9 trillion stimulus that has been passed by the House, and now it's on its way. The bill is on its way to the president to be signed. I expect him to do it sometime this week. When that stimulus gets passed, I think it's already been priced into the market, so it's not like the market's gonna like super rip on the news. But then at the same time, when they do release news about when the stimulus checks are going to be posted, that might cause a little bit of a market rip ski. Okay. So on the daily here, you can see the NASDAQ has a very bullish reversal setup. We'll see how this continues on. It could be a bearish day followed by a bullish day. We could also see a correction down to halfway of this level here and then another rip to the upside after that. But I think, in my opinion, and I don't need to be right all the time. I just need to be right more than half of the time, right? I just need to be right 55% of the time for my hypothesis to be sound, is that I think that this is the bottom for NASDAQ right now, okay? Meaning to say that the correction is over, and you should have taken aggressive positions for the upside from here, which is what I did on Friday and throughout the whole of last week while everybody was selling, selling, selling. And remember that this is a parabolic drop down, right? Then I was buying, 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 right? So profit from the panic, and that's what is the name of the game, right? You buy when others don't want to buy, and you sell when others are buying. Okay, so you always do the opposite of what the market does, because if you follow the herd, and here's another thing: if everybody's talking about how the market is supposed to head down further, what do you think is going to happen? Do you want to be a part of the sheep herd? Do you think the market's going to come down? Because everybody is inciting fear, right? Oh, the bond market is this, the bond market is that. Remember that 3/4 of the time, out of 4 times, 3 times the market will be going up. Okay, so you betting against the market is already against what you would typically want to do. But why do I take hedges at certain points? It's when we have overextension, right? Overextension. You can see this is a overextension, right? Far above the moving averages, right? Far above the moving averages, and just in the delusional world, right? Where we were speculating, people were dumping money into Bitcoin. Yeah, let's go to the moon, AMC, GME, right? And now we've come back down to the 150 moving average. Deep correction. Now is the time to buy, when everybody's saying, oh no, bear market's here, we're gonna die, everything's gonna go to hell, we're not gonna see any more money, inflation, da 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 da. That's when you buy, because everybody is selling. So you need to always look at it from that standpoint. When there's fear, when there is extreme fear and you feel the fear, that's when you buckle down and you buy. Nobody wants to buy that time, because they will always believe that the market will keep going down. But when you get the retracement that you want, you start picking up shares at a deep discount. And that is the name of the game, okay? That is the name of the game. I've been doing this for 9 years, guys. You would think, like, at some point, I would notice this pattern, okay? So the best part about this is you get to understand this from my perspective after viewing this happen over and over and over and over again. Every year, I see this happen 5 to 6 times, right? You would think after 9 years, I know the pattern, right? If I've seen this 45 times, you know what I mean? So take a page from my book and start to take some longer term positions here. Start with positions. You can add along the way, right? If it goes further down, you can add some more, right? But if you don't add here at all, and you say, oh, I'm going to wait for a confirmation. Oh, I don't trust this drop yet. Then you have lost out on the next big run to the upside, okay? And who knows when that run is going to be, or who knows where that run is going to lead you. What's important is you pick up the stocks that you love when you know they are undervalued. But how do you know if they're undervalued if you don't know how to do fundamental valuation? I guess that's the biggest problem. Everybody wants instant gratification nowadays, and therefore it's easier to just do lines on the chart. That's much easier. So let's just keep doing that. Learning market structures and learning fundamental valuation is what will get you far. Okay, and knowing when the market's overbought and when the market is oversold, not through technicals, but through inner workings of the market, is what will make you money in the long run, not lines on the chart. Because technically, this could still go further down. That's the reason why technical analysts have a big problem when the market comes down. They lose a lot of money betting on the downside. They think, oh, no. We just, you know what happens? Let me tell you what happens. Look at where the NASDAQ closed. Okay? Look at where the NASDAQ closed. We closed below a key level of resistance. Okay? Number one, if you're a technical analyst looking at this, think about it from their perspective. Okay? Number one, the NASDAQ closed below a key level of resistance. Right? This is bearish. Number two, the NASDAQ closed below the 50 moving average. Right? Number three, there is still bearish flow and we haven't seen much bullish betting, right? So technical analysis only works sometimes when the market is in a uptrend. The moment the market comes into a downtrend, I'm sorry, that's when everybody loses money because you don't know what the valuations are. You don't know what the worth of things are. How are you going to judge it, right? Okay, well, that leaves my webinar for today. As I said, the theme for this week should be either the bulls are back, baby, or the bears are clawing, right? They're clawing. They're no, we want to win, right? And so we'll see either way. We'll see what happens this week. I'll be putting out the weekly report with the breakdown of the secular trends that I'm watching for this week, the rotations, and then choices for rotations. More than likely, I'll do some picks for you guys as well, looking at what we have. I hope you enjoy watching the webinar. Yep, have a good one. Wait, let's see. I have a question here. I'll answer the question right after I stop the recording here. All right, well, I'm going to stop the recording. Well, thanks for tuning in to the Everyday Growth Advisors webinar. See you next week, same time, same channel. Bye-bye.